Hello guys, welcome back to ESENtaxa. Andrea Papito here, and in this video we are going to examine the pensions. So, if you perceive a pension from abroad and you want to relocate to Italy, you want to retire in Italy. If you are new in this channel talks about the Italian fiscal system. We talk about the Italian taxation and how you can benefit from the most favorable regime that the Italian government put in place in the recent years. As either you're a worker, you're an employer, a highly qualified skilled person, you want to live out of your passive income, or if also you are a pensioner. So, and each type of profile or type of income can be optimized in Italy, exploiting the best tax regime. And here in ESENtaxa, we talked a lot about these regimes, and we help people to understand if the relocation makes sense for them. And in the description below the video, you will have the link to our consultancy services, so you can understand exactly which is the service that might fit for you. In this specific video, we're going to examine the pensions, so the income, which is defined as pension, that you are perceiving from abroad. And specifically, we are going to examine the convention to avoid the double taxation between United States and Italy. So these conventions are most likely the same. They change a little bit between countries. Italy signs always the same type of convention. Italy always use the same template, okay? So each paragraph of this convention, it's resemble the other ones. So, but United States has a peculiarity, which means that the citizen of United States are always taxed based on their citizenship and not based on their residence. So that convention differ a little bit from the others. So that's the reason why it's worth make a video on this specific type of convention. And of course addressed to the US citizen mostly. Now, the convention has an article called Article 19, in which it describes exactly how we have to treat, from the taxation point of view, the pension from United States while you're Italian fiscal resident. It's very important to understand that the convention are quite complicated to read, and sometimes the convention overlaps against the local tax laws. So there's just a double analysis that needs to be done from the fiscal point of view, the convention between the two countries and the local law that sometimes goes against the convention. But of course the convention has higher power. So whenever you have a doubt, the law written in the convention has more value than the law written in your own country. The problem is that when you're dealing with people working in your own country, like employee of public administration, tax offices, they are not aware of this convention, and sometimes you might have an issue. That's the reason why subscribe this channel, notification bell, like button please, and you can talk to us. You can write at esentaxa@gmail.com in case you have encountered these issues, and we can basically help you to deal with it. Now, going back to Article 19, you're a pensioner, you want to retire in Italy. How do you do that? And mostly from the taxation point of view, it worth or not? So, based on the Article 19, we have extract these two main scenarios, okay? So the first scenario is the easiest one, is the private employee. So for all your life, you worked for private companies in the United States, okay? So how it works when you move to Italy, when you basically decide to reside in Italy. So based on the convention, your pension should be paid from the American private institution gross, without any withholding tax. So this is what the Article 19 says. So you receive a pension gross from United States, and this pension would be taxed entirely in Italy, only in Italy, because Italy has the let's say the power to tax your pension entirely. And this happens when you worked for private employers, so you were all your life a private employee. And again, this type of pension, while you're Italian fiscal resident, is taxable only in Italy. So the problem is that you have to make sure that the institution that pays you the pension knows about the rule of this convention, and this pension has to be given to you gross. So this is a very easy scenario. This is, as a US citizen, as an Italian citizen, doesn't matter if you live in Italy, you will be taxed only, exclusively in Italy. Of course, as an American citizen, you always have to provide the US tax file return to IRS in US, but you have to, this is based on your American accountant, but I assume you have to declare this pension also in US, but based on the convention will be taxed only in Italy. The second scenario, which is a little bit more complicated, is when you perceive a public pension from a public entity. Okay, so for example, classical example, I received a lot of email from clients who received pension because they had military service. They performed military service and they receive a pension, a military US pension. This is a public pension from a public entity, a government, so it's a public entity. And for this kind of pensions, you will have two scenarios to analyze. The first scenario is that if you are an American citizen, so you possess only the US citizenship, this public pension is taxable only and exclusively in the United States. Okay? This means that if you're living in Italy and your only income is this one, this public US pension, in Italy you don't have to pay any taxes. And you don't even have to declare this pension on the Italian tax file return. While if you're an Italian citizen and you reside in Italy, so you have both conditions verified, like resident in Italy and Italian citizen. So it means that for a reason or another, you acquired the Italian citizenship while you were living in the United States. You had already the Italian citizenship. So if you possess Italian citizenship and you reside in Italy, then you have to contact your US public entity and tell them, look, based on the Article 19 of the Convention between the United States and Italy, I have to receive the pension gross because the Italian tax office is expecting to tax this pension exclusively in Italy. So it behaves like a private pension, okay? This works, either you perceive a pension monthly or you perceive a pension once in a while or just in one shot, okay? So this is the scenario as United States pension if you're a US citizen. Most likely in all the rest of the conventions, what we have is always the same thing, like private, for example, from Canada, from Australia, from UK and other countries in the world. Normally, pensions that are coming from private employers are always taxed in a country where you reside, in this case, Italy. And the public entity, if you're a citizen of that country and you receive a public pension, you always pay taxes only in that pension, so only in that country, which means that you're perceiving you're subject to a withholding tax on this specific public pension. It's most likely the same schema. And then if you acquire the citizenship of Italy and you reside in Italy, then the income is taxed like a private employer, so your pension will be taxed only in Italy. So for the pension, the convention normally says that it has to be an exclusively taxation, either in the country where the pension is issued or in the country where you reside. I hope this thing is clear. Now, most of you guys have heard about the 7% flat tax, so the favorable tax scheme for pensioners who wants to retire in Italy. And we receive a lot of questions about this specific scheme. This specific scheme works in this way: you will be taxed only at 7% flat tax on your worldwide income if you are perceiver of a foreign pension. Okay, so this is the requirement. And you don't have just these advantages of pay only 7% flat tax, but you don't have to disclose your foreign assets and your foreign bank account. Okay, so there is no wealth tax on your worldwide income while you're returning fiscal resident, while you are perceiving a foreign pension. So the first constraint is that you have to perceive a foreign pension. And the second one is that 7% flat tax of this regime for pensioner is applicable on your pension received from abroad and from all other eventual income around that you're receiving worldwide. Of course, this is not applicable for the income that you're receiving within the Italian territory. Most likely, as a pensioner, you don't work in Italy, you just want to go in Italy to retire. And especially if you're from outside European Union, if you want to stay in Italy, you need to have a specific visa with this program in which is forbidden to work. So the 7% flat tax is only for pension and for aside income coming from abroad. And of course, the other big constraint of this favorable regime is that you have to pick up a village in the south of Italy with not more than 20,000 inhabitants. This can be a constraint, so it needs to be evaluated, and we can also assist you with this kind of scheme. In the description below the video, don't forget we have the link for our consultancy services. Now, the question is, based on what we have said here, how this 7% works, how and where the 7% is applied, in which income, okay? So, if you're a private, if you receive private pension, it's very easy. Instead of tax this pension in Italy with the RPF taxation, which is from 23 up to 43%, is the bigger one, you apply the 7% flat tax, the income is coming from abroad, you pay only 7%. That's it, it's over. And of course 7% also if you have other income from abroad next to your pension. The problem is that, what if my pension is already taxed? Because the convention wants that this pension is taxed only in a country where it's issued. In this case, you don't apply the 7% on this because the convention said that this income, this public income, of course, is taxable only there. But it's true that you are receiving a pension. So what happened is that you can apply for this 7% on only the incomes aside this income. So if you have dividends, if you have a house under rent abroad, you pay 7% on the income coming from abroad, and not on this pension, because this pension is already taxed and cannot be put in your Italian tax filing return. So this is the thing, and I hope I give you the general schema on this pension, analyzing the convention in Article 19. Of course, each scenario needs to be analyzed carefully, case by case. So again, I recommend you to write us and ask us a consultant services 1 hour call in which we can analyze your case. If you want to move to Italy, understand if for you it makes sense to apply the 7% flat tax from pensioners, or simply move to Italy, check in your convention, see how your pension is taxed, and check if it makes sense relocation for you. That's it for today. Thank you very much. Again, subscribe to the channel if you want to be always updated with Italian regulation, fiscal law, and the tax system. Please like button, it helps a lot to grow the channel, and the notification bell to receive your videos, to see your videos popping up on your YouTube profile. And that's it for today. Thank you, see you the next time.